Hi, Josh Barker with Josh Barker Real Estate, and thank you for visiting us for our market update for the month of January 2023. Before I get started this month, I just want to take a moment and say thank you to all of our great past clients and center of influence that provided so much support to our company in this last year, in the year 2022. In fact, we ended the year being voted best of the North State, which, as you could imagine, was a very satisfying thing for all of us here at JBRE. So on behalf of all of us, we just want to again say thank you. Let's go ahead and dive right into the report. So I'm going to cover a market recap for 2022 first. And what I'm going to say is that 2022 for real estate really was a transitional year. We finished at 3,010 transactions in the marketplace, which was down 17% from the year prior. Our listings total for the year came in at 3,980, which is down 6% to the year prior. And really, this was a year that was transformational in the fact that we didn't have a lot of, or any, pandemic-related purchases taking place. And we had a higher interest rate environment. So really, we were transitioning away from that weird market of 2020, 2021. And now we're kind of transitioning into that more normal, balanced market. For the month of December, we had approximately 164 properties that closed escrow. And that is down a shocking 42.5% compared to the year prior, when we had actually closed 285 transactions last December. And so that largely was a result of interest rates going up. As rates went up, it had an impact on buyers' purchasing power, and that really caused our sales volume to go down. The next thing to look at is just our active listings report. Right now, there's roughly 682 properties that are for sale here in the Shasta County MLS. And that's up about 11% compared to a year prior. So a few more homes for sale. Sales are lower, and obviously that means that buyers have a little bit more to choose from, which is always nice when you're out there shopping for a home. Next thing to look at is just overall home values. We are getting the question about, well, the market looks a little softer. And I've had a few questions around, when was the peak of the market? And so the best that we can establish right now for a peak, which is always, depending on the data you're using, it's always difficult. But we're looking at November and December of 2021 as being the peak in this market. And then what happened at that moment was interest rates, as most of you already know, began to go up. And as a result, sales volume went down. And following went prices. Prices started to get softer. And so depending on where your home is located, depending on your price point, right now we're looking at valuations that are down roughly between 8 and 12% overall compared to the peak. And those are just numbers that are based on what the multiple listing service has to show. So the next thing to look at is just mortgage interest rates themselves. You're going to hear it a lot in this market update, but truly the biggest issue or the biggest headwind that the market has is mortgage interest rates. It was reported that the rates were as low as roughly 3.22%, around November time of 2021. Now they're averaging 6.5%. So rates have actually doubled, and that's reduced purchasing power by over 30%. And that's having an impact, obviously, on the average sales price in the market and the median sales price in the market. And so for those who are trying to figure out what to expect next, watch the interest rates. If interest rates remain similar to what they are today, home pricing could probably soften. If they go up, pricing will likely really soften. And if interest rates were to go down, that could actually start to shore up the valuation environment for homes and start to stabilize pricing. And so, just like you, we'll be watching those interest rates to get a feel for what to expect next. So in any case, if you have any other questions, just know we're always here to help. I want to thank you again for taking your time with us today. Make it a great start to 2023.